Hello, we are TAMID Beta chapter at the University of Pittsburgh, and today we are going to tell you why NextEra Energy is an outstanding stock that you should invest in. First, I would like to provide you with a general overview of the company. NextEra Energy is a U.S. energy supply company that operates at all levels of the utility supply chain: generation, transmission, and distribution. As you can see on the map, much of the energy NextEra generates is from wind and solar, and they are a leading provider of these utilities in the United States as they generate more electricity from wind and sun than any other company in the world. NextEra owns several subsidiaries, including NextEra Energy Resources, FPL FiberNet, and NextEra's principal subsidiary, Florida Power & Light, which is the third largest energy utility in America. Florida Power & Light utilizes nuclear, solar, and natural gas to provide electricity to the state of Florida. There are many qualities that set the company apart from the rest of the utility industry. First, NextEra Energy is ranked number one in electric and gas utility industry by Fortune's 2016 World's Most Admired Companies. It has also claimed a position as a 2016 Most Honored Company by the Institutional Investor magazine, and even named, for the 9th time, the World's Most Ethical Company by the Ethisphere Institute. These rankings result primarily from the company's aggressive sustainable efforts and sensitive to climate change. The company achieved its lowest ever emissions rate of sulfur dioxide, nitrogen oxide, and carbon dioxide in 2014. These rates were 97, 79, and 55% lower than the U.S. electric sector rates. In addition, NextEra operates several wildlife and habitat protection programs to conserve ecosystems that are home to many animals such as eagles, kestrels, sea turtles, crocodiles, osprey, and more.
NextEra Energy currently operates massive energy generation infrastructure. In total, the company can generate roughly 45,000 megawatts of energy. To compare, a typical light bulb is rated at about 60 watts. Thus, NextEra Energy has a capacity to power 750 million light bulbs at a time. And as we now know, NextEra invests heavily in renewables. In 2014, NextEra produced more than 32 million megawatt hours of wind energy. Furthermore, the company operates roughly 700 megawatts of solar power. This is enough to power more than 432,000 homes at peak production. NextEra Energy is also one of the largest U.S. commercial nuclear power unit operators, currently operating 8 nuclear units in Florida, New Hampshire, Iowa, and Wisconsin. Note that while not renewable, nuclear power is very clean. One of NextEra's subsidiaries, NextEra Energy Resources, is one of the world's largest generators of renewable solar and wind energy, with plants in California, New Mexico, Nevada, New Jersey, and Ontario, Canada. The subsidiary also has invested more than $20 billion into its wind business. Clearly, NextEnergy and its subsidiaries are one of the largest electric utility providers in the U.S. industry, with a focus on clean energy. Given positive projected trends in market-wide renewable energy production, NextEra's current electricity generation infrastructure and investment patterns should yield high returns for investors going forward. As a major U.S. power supplier, NextEra must invest heavily in transportation infrastructure. NextEra Energy's subsidiary, Florida Power & Light, transports energy to roughly 4.8 million homes and businesses in half the state of Florida through 70,000 plus miles of power lines. Another one of NextEra Energy's subsidiaries, Lone Star, owns roughly 330 miles of transmission lines. Furthermore, NextEra Energy owns a 50% share in NextBridge, a company that plans to build about 250 miles of electricity transmission lines. As the third largest U.S. utility provider, NextEra owns more than 74,000 miles of power lines overall. To grow their energy transmission infrastructure, NextEra recently signed with EQT Corporation in 2014 to build 330 miles of natural gas pipelines through West Virginia. NextEra Energy Partners, which is the company's subsidiary that manages and owns contracted clean energy projects, currently owns 542 miles of natural gas pipeline assets. As you can see, the company is consistently expanding their resources and customer base. Along with constantly serving a large customer base, to stick to NextEra's green initiatives, 99% of the water the company withdraws as energy to transport power to its customers is returned to its original source. NextEra Energy currently operates in 27 states and several Canadian provinces. Across the U.S. and Canada, the company is capable of generating enough energy to power 3.4 million homes. At a smaller scale, NextEra Energy Resources wind energy facility in Contra Costa County, California, generates enough energy to power more than 23,000 homes. As well, the subsidiary, Florida Power and Light, distributes to more than 9 million people in roughly 4.8 million customer accounts. Now, how does NextEra produce and distribute its energy, especially solar and wind? Using solar panels, NextEra is able to convert solar radiation into direct current electricity, which is eventually converted to the industry standard of alternating current. The electricity then travels through transformers to increase the voltage for delivery onto transmission lines. These lines are then dispersed through the nation into homes and businesses. Wind energy essentially undergoes the same process, however, wind-generated mechanical energy is turned into electricity through the use of an alternator. Overall, it is most important to note that the company's energy supply operations are vertically integrated.
From a financial standpoint, an investor should be thinking about three main criteria when deciding whether or not to invest in a stock. First, whether research suggests that future price will be higher than today's price. Second, whether substantial cash payment from a company's profits, also known as dividends, are expected. And third, if the stock price has grown significantly over a preceding period. Here on this slide, you can see a basic yet important representation of NextEra Energy's performance as a stock. NextEra's market cap is $54.68 billion, showing a large size of the company. This graph is accurate as of April 22nd and shows the 5-year trend in NextEra's stock price. As you can see, the stock price has been rising each of the last 5 years. The 52-week change allows us to see that over the past year, NextEra's stock price has grown 7.48%. Now I want to turn to 6 of the indicators that tell the story of NextEra Energy's stock most accurately, namely the PE ratio, PB ratio, return on equity, dividend yield, net profit margin, and long-term debt-to-equity ratio. Alone, these indicators are certainly revealing of the quality of the stock, but when we compare them with electric utilities industry averages, we can get an even better sense of the quality of the stock. Overall, these indicators will reveal NextEra's high relative growth and profitability and its low risk. First, we can see that NextEra's PE ratio is 19.28. On its own, this might lead us to believe the company is not much of a growth stock, given that the S&P 500's average PE ratio is currently 21.9. However, PE ratios are better compared with companies in the same sector or industry, and so when we compare NextEra's PE ratio with that of its industry, the electric utilities industry, it becomes possible to call the company's stock a growth stock. Now let's take a look at another indicator, the PB ratio. I've highlighted this in red to show that it might appear, at first glance, to be one of the more concerning indicators for NextEra. However, I don't believe that any concern is warranted. With a higher PB ratio than the electric utilities industry, you might think that the market is overvaluing NextEra in relation to the book value of its equity. But we think that this should be viewed as a sign of the strength of the stock and investor confidence in its future value, especially given the company's high level of investment into new distribution infrastructure and positively trending generation technologies like wind and solar. When viewed with this information in mind, you can see that investors are simply more confident in NextEra's potential growth than the rest of the industry. Next indicator, return on equity, is going to tell us how profitably NextEra is utilizing shareholder equity to generate growth in earnings for the company. When we compare NextEra's ROE with the rest of the electric utilities industry, it's clear that the company is outperforming the industry substantially. This is encouraging for investors who should be looking to invest in a company that is making profitable investments with their equity in order to increase stock value for shareholders. As we discussed previously, NextEra is making such investments, which is also in general a testament to the quality of their management, whose job it is to maximize shareholder value. Dividend yields are typically high in the electric utilities industry, which is a primary reason many investors might consider investing in an industry company. Naturally, cash payouts as a reward for ownership of equity are always welcome for investors. Stocks in the electric utilities industry are typically called widow and orphan stocks because they are larger, low-risk companies that pay a high dividend yield, perfect for widows and orphans who need to invest safely. NextEra is leading the industry in dividend yields, meaning that at the very least, investors can expect a high reward for simply owning the stock in the company, regardless of what happens to the stock price. This makes NextEra a very safe buy in a low-risk industry. Next, I want to take a look at NextEra's net profit margin. This is going to show us more broadly how much money NextEra makes per dollar of expenditure on energy production. This is a simple way to see that NextEra is supplying energy more profitably than its competitors, which is an excellent sign for investors interested in investing in a company that minimizes production costs and maximizes profits. The fact that NextEra can do this while remaining one of the world's cleanest energy suppliers is both astounding and impressive, and should be noted by potential investors as a signal of the company's commitment to sustainability. Finally, I want to take a look at NextEra's long-term debt-to-equity ratio. This will be an accurate measure of how much the company borrows in order to invest in projects and infrastructure improvements aimed at increasing the company's growth. While on its own, the ratio appears high for NextEra at 137.89, meaning that their long-term debts are greater than current equity. This should be viewed in light of the fact that utilities normally have high levels of debt because of the large investments needed for the maintenance, development, and expansion of capital and infrastructure. And when we compare NextEra with other companies in the electric utilities industry, it should be clear that NextEra is a safer investment with lower long-term debt-to-equity ratio. Overall, when reviewing these indicators, it should be clear that NextEra is exhibiting higher levels of growth than the rest of the industry, lower risk, higher dividend yields, and better utilization of investors' equity.
While NextEra is outperforming the industry, there are still certain things to keep in mind before investing in the company. Firstly, NextEra has high levels of debt. While this is concerning at first, upon looking into the utilities industry as a whole, you would find that substantial operations and infrastructure is needed to continue to provide electrical services. Additionally, in the utilities industry, high levels of investment into more efficient technologies and renewables is common, and NextEra, as shown by its labels as most ethical company and most honored company, and its increasing rate of energy production with constant rate of CO2 production, is clearly investing its money in the right places and getting high return on investment. NextEra has also been in the process of acquiring Hawaiian Electric Industries, pending the Hawaiian government's consent. However, since this deal is not yet complete, there is a chance that the deal may not go through and the company won't realize anticipated benefits of the acquisition. A decision in favor of the acquisition would have the potential to drive the stock price upwards, while a decision by the Hawaiian government in opposition could halt the company's upwards trend in stock price growth for an unpredictable amount of time. Overall, we don't believe that a decision against the acquisition would significantly impact the company's profitability or high dividend yield significantly, much less its already low risk. Further risks with this stock are associated with the industry as a whole. Further government regulations on renewable energy and nuclear energy production could hinder NextEra's business operations. Additionally, with so much infrastructure required to run electric distribution, all field capital is at risk of being affected by weather conditions, as the company could incur additional costs in order to restore service and repair damaged capital, and could also lose revenue due to power outages, etc. With continually decreasing gas and oil prices, NextEra's profit margins could begin to decrease, as well as their return on investment on capital. Lastly, environmental mistakes could cause extreme damage to the stock. For example, as a result of the British Petroleum's oil spill, BP's stock price decreased 55%. NextEra has risks of ownership and operation of nuclear generation facilities, and if something goes wrong, it's on them. With all this being said, utilities companies are notorious for being low-risk stocks, as everyone always needs energy, so we do not think that this risk assessment should deter any prospective investment.
The utilities sector is outperforming the markets because of a few key factors. First, utilities companies are better to invest in than companies in other sectors because the demand for utility companies' services remains relatively unchanged, despite wavering economic conditions and market fluctuations. Note how the market has been highly volatile over the course of the past year. Second, utility companies are also able to pay high dividends since they typically have a steady revenue stream. This makes them attractive to investors looking to receive steady returns during a period with low interest rates, like the current one. Ultimately, they are low-risk investment, and NextEra is low-risk while also seeing high growth. Hillary Kramer, editor of the Game Changer stock newsletter, said, "Utilities are the bedrock of the corporate landscape. Everyone is a customer." She went on to say, "When the broad market stumbles, utilities bleed too. However, the extent of the losses is usually substantially lower. One example of this was at the beginning of the financial crisis in 2008. NextEra stock held up much better in the 3 corrective phases than the rest of the market, which stumbled. In conclusion, NextEra Energy is a company on the forefront of the electric utilities industry. It leads the industry and the market generally with outstanding social responsibility, infrastructure investments and growth, and dividend yields. As an investor, you should rest assured that NextEra would be investing your equity to your advantage. Additionally, the electric utilities industry is outperforming the markets substantially. This makes NextEra a top performer in the top performing industry. Such excellent overall performance is why we firmly believe NextEra Energy is worthy of your investment.